Welcome to the Kickstart podcast, where we highlight the stories of how professionals kickstarted and navigated their successful careers. My name is Preston, and on this episode, we have the pleasure of hosting someone who has an impressive career from working as a consultant before deciding to pivot and start his own analytics technology company that is changing the way people can invest into fast growth companies. Chris, thank you so much for being on the show.
Hey, thank you so much for having me. I'm really excited to be here, Preston.
Likewise. So, for those that are unfamiliar with who you are, Chris, would you mind just sharing a little bit about yourself?
Sure thing. As you mentioned, I'm the founder and CEO of a company called KingsCrowd. I graduated from Boston College, and my first job out of school was at a management consulting firm called LEK Consulting, where I got my hands dirty and learned everything you could ever want to know and not want to know about private equity due diligence. We serviced many major clients who were looking to acquire private companies by doing a lot of their market intelligence, doing financial models, talking to management teams, so on and so forth. And that's where I really became experienced with learning about the traditional private equity industry. And I kind of had this big aha moment one day while I was at work where I realized, wait a second, I'm spending hundreds of hours diligencing private companies for private equity firms, and yet I have no way of investing. Why is that? And little did I know that it would lead to the next, 7, 8 years of my life thus far, where I basically Googled, why can't I invest in the private markets, and learned about some of the traditional rules that had kind of barred non-accredited investors, AKA 97% of America, from investing in anything outside of the traditional public markets. And got really, really excited at that notion. Ended up starting a fintech blog about it as a side hustle. Went in and kind of cut my teeth working at a real startup that had raised 8 million in seed funding. It was a travel tech startup, helped them raise their Series A, and then ultimately had my blog acquired by one of the founders of Napster from way back in the day, and now is really the beginning of creating what KingsCrowd is today, which is essentially trying to take this new ecosystem that allows anyone to invest into high growth companies, as you mentioned, private companies, private real estate, private anything you could think of, and is making it accessible to the masses. Been at it for 4.5 years, and certainly I'm having a time in my life, if not the hardest time in my life as well.
So much to unpack there. And thank you for that wonderfully just said high level summary of your experience. So I just want to backtrack a little bit and just ask. So you went to college, and right after college, I guess your first real job was consulting. Was that correct?
That's correct. Yep.
And it's really interesting for me to hear, and especially for those that are listening, a lot of founders today have either, they went through that either traditional consulting background, maybe the investment banking background, and they were able to leverage the skills and experience to obviously a much successful career down the line. And many of them branched off doing their own thing. How much of your experience in consulting would you be able to say in retrospect, like, that was super helpful or gave you the training wheels to be able to kind of help start your own company when you decide to do that?
In so many ways, I took the day job of LEK Consulting for most associates and have turned it into a scalable business. I would not be where I am today or doing what I'm doing today if not for that experience. Now, to be clear, consulting comes with many challenges. It is a super hard life and it is a really hard job, but man, do you learn a ton. And it just so fit, right? It became the problem set of how do I provide this type of diligence and research and tools to the masses? So it has completely shaped my career thus far in a way that's probably even larger than happens for most folks.
Gotcha. So at this consulting job, as you mentioned before, it seemed like it planted the seed of like, wow, okay, I'm learning a lot more about these private markets and how does the average person interact or possibly invest into it. But then you didn't immediately start your company after consulting. You mentioned that you started your blog, and then you said that I believe you joined another kind of tech company. Was that right? And so
yeah, that's
when
exactly
you did
right.
that, was the idea of like starting your own thing kind of growing, slowly germinating the back of your head?
Oh man, like was it ever? Yes, in a major way. I remember I started this blog, and at first I was thinking I would just write about the industry. But then I realized that founders were really interested in what I had to say. And I thought, whoa, wouldn't it be cool to actually talk to the founders that I'm excited about that are helping to reinvent the private markets? And they started accepting my invites to be on our blog. And every time I talked to another founder, it became just more and more imminent to me that I like had to become a founder. Like, and the biggest thing they kept saying is like, just do it. If you have an idea, if you really feel like you need to be a founder, like just do it. Don't wait for the right moment. And every time I heard that, it was just like, I think I need to do this. Like it just, by the time I started this company, it was like I was just so on the verge of like I have to become a founder. Even though I thought in my heart I was like I think I need to get more experience and I need to learn from people, who are more knowledgeable than me. I was like I also just need to go and build something. So yes, it was definitely germinating in the back of my mind for a long time.
Would you now find yourself in the same shoes, giving the same advice to other people who want to become founders? Like at the end of the day, it's all about action, execution, and you just got to do it. Do you agree?
You have to do it, and the reality is life only gets more complicated as you age. And what happens is, and I saw it with a lot of my colleagues in consulting, is you start to get used to the salary that you have and you build
Mm-hmm.
your life around that salary and you start to buy more things and you get the house or whatever. And now suddenly you're in a position where you're like, well, I need to be paid $200,000 to $300,000 a year in order to be able to live comfortably. It's like, well, good luck spending, a year or two not making any money as a founder, and then maybe making a pittance pay for a while as well. So being able to take the level of risk that it involves to become a founder, the
Mm-hmm.
younger you can do it, I say the better.
Gotcha. So while this idea of like, oh my goodness, maybe like being a founder one day would be interesting. What about like you investing? Like, what were your thoughts, or what was your relationship with investing at that time? Like, did it not even cross your mind? You were just like really excited about extending your network, meeting these founders, learning about private markets, or perhaps maybe you invest a little bit while you're in college, or maybe live with your parents' money for fun.
I started investing probably in my freshman year of college,
Oh
in
wow.
in public stocks. Growing up, I always had this inkling and desire to want to invest, and I can't tell you why. I remember watching CNBC when I was young, and then one day going to lunch with my mom at Panera Bread, and I came home, and it was the first time I'd ever been to a Panera. It was the first one in our community, and I thought,
Mm.
my gosh, this is a step change from McDonald's, right? Like the quality of food, all of those things. For that time, it was really impressive. And I told my mom, I just found it on Yahoo Finance. I think you should invest in Panera Bread. Like, this is the future of food. Had they listened, they would have made a good deal of money on that investment because Panera Bread ended up doing quite well over the next decade from when I had said that. But I always had this desire or interest in investing. And so, yeah, I started in college. And then as soon as I learned about this new industry where you can invest in private companies, I was right on it and started investing in companies. Any disposable income I had always ended up going into investments. And I probably have about 30 or 40 startups in my investment portfolio now. I have tens of real estate properties where I'm owning fractional shares within each one of those. I have probably 20 or 30 collectibles I'm invested in on fractional share platforms. So I've become very invested in all of these different alternative assets.
That's super cool. I think we can save it to another conversation, but I think the whole concept of fractional ownership and fractional investing is certainly booming right now. And there's a lot of really exciting platforms out there that allow you to do that, allow the average person, in case you're listening. So then, okay, that's really, really insightful. So you've been investing for quite some time, and then consulting catapulted you into the whole world of private. But instead of starting your own company after consulting, you decided to kind of, it seems like, take a stab at the whole small startup thing. How did that happen? Like, and how did you end up joining the company that you ended up joining?
It's interesting. When I was working at the consulting firm, it became very clear to me that
Mm-hmm.
I think more than anything, when I think about my career and the things I want to do, I want to be able to have genuine impact on the end product or whatever is going to happen, right? And I realized in consulting, even though we were working oftentimes for the C suite or the managers of private equity fund, we still couldn't really sway their decision making. And it was kind of baffling to me that people would spend so much money and still not utilize that information to make different decisions. But that was the reality of it. And for me, that just didn't work. And so I felt like if I'm putting so much of my being into this job and I'm still not able to affect change, do I really want to be here? And that's when I realized, well, if I want to have that opportunity, I probably need to be in a really small company or start something myself.
Mm.
And so when I found this travel tech startup that had just raised some significant funding and they were looking for someone with kind of my background, it was basically a business associate. I thought, perfect. This is my chance to go cut my teeth in a real startup, take an actual risk, be a part of a seed stage company that's really early, and help them try and navigate the hard waters of being an early days company. And so it was an easy decision for me to kind of take the leap because I knew I needed to make a change and start moving towards the world that I saw myself in longer term.
Gotcha. Did you have to make a step backwards, if you will, on salary, transitioning from the consulting to the startup world?
Yeah, definitely. I was actually getting married that summer that I ended up leaving my consulting job. So I end my consulting job, I get married, and I start this job all in a matter of a handful of weeks. And I certainly felt bad. I was like, my wife and I were just coming together for the first time, and bringing our finances together. It was like, I had this great job and suddenly I'm already taking a hit, how much money I used to make. And I kind of knew that was going to come with the territory, but probably one of the biggest pieces of advice I would say is whoever your partner is, the most important thing is that they're a supportive partner who's there with you for the journey, because my wife has been nothing but incredibly supportive. But if they're not, boy, is your life going to be difficult trying to do startups and be a founder.
That's huge. And then how much did you weigh the equity at that time? Was it like some sort of abstract, not real money, or hey, like this is actually, it could be something substantial?
My advice to everybody going into one of these early day startups is consider the equity to be zero. Just consider that it's worthless and don't worry about the equity, because ultimately odds are it's going to be worthless. And to consider that part of your salary is a fool's game and it's not money you're going to see for a really long time anyway. It's opportunistic. Hey, if I hit the jackpot, of course I'm going to be happy, but I'm certainly not going to rely on it.
I got to say, Chris, hearing it from you as a founder today saying that, and just, I really appreciate the honesty. And we'll talk about this more, but at your current company, do you offer equity to people who join you?
Yeah, we offer equity to every person, but I never try and say, well, you know, you have your base salary, but then you're also getting this equity. So ultimately you're getting this salary. I never say that. I say, we want everyone to have exposure and a piece of this company, but I also recognize that this is not your salary. And so when you're trying to negotiate with me, it's never, well, I'll give you more equity in exchange for your salary. It's basically just, you want me to meet your salary. I understand that, because the equity from my perspective is worth nothing. And I don't try and sell any stories of, you know, this could be worth $1 million in a couple of years. I never say that kind of stuff.
I appreciate that. So you joined the startup, and then was it at that time you started your blog on the side, or like what was the timeline chronologically?
No, so when I was at my consulting job, I actually started the blog.
Oh.
Yeah, and you know, I guess I'm more than 5 years removed from that job, so I feel like no one could give you trouble anymore. You know, I started getting invited to events. I got on a couple of press lists. I had interviewed a couple of founders who worked with a PR firm, and that PR firm was kind enough to put me onto a press list. So I started getting invited to these, like, you know, conferences that would cost you $2,000-3,000 to go, and I was getting invited to go for free because I was press. And I just thought this was the coolest thing ever. And not only was it free, but I had access to talk to all of the biggest people at those events, because again, I was considered a journalist at that point. And once I was on the press list, no one was asking any questions about how many readers I had or anything like that. So I had the lay of the land. I was able to access anyone I wanted. And I remember one of the first conferences I went to, this is the part, you know, where my first job might be upset. You know, I kind of said, oh, I need a couple sick days, you know, but I was really going to this conference to interview all these cool fintech founders. And I definitely did that more than a few times. But I remember going to this conference, and literally the main sponsor was Lending Club. And it was after Lending Club had just had some major issues with their old CEO, and they brought in a new CEO, and they were trying to change the narrative around the business. I was probably one of the few journalists who was willing to tell a positive narrative and have a conversation with them and learn about how they were going to progress forward, because I was still a huge believer in marketplace lending. And so I ended up, you know, walking into this conference center with thousands of people, seeing Scott Sanborn, the new CEO of Lending Club, on this stage among thousands of people. And his next conversation was with me, someone who was 2 years out of school, you know, who had almost no following. And here I was getting this opportunity to sit down with the CEO. So it was just really cool. And I was having a time in my life, but I was doing it on the side for about 2.5 years while I was a consultant.
Wow. And it was mainly just you. Was it only you?
It was all me. And then I brought on my first intern, and he was awesome. And, you know, I did my part. I actually helped him get a job at LEK Consulting afterwards. So I was able to help him out and he helped me out. But yeah, for a very long while, it was just me.
Fantastic. And then I remember you saying that you were able to successfully exit your blog, which is amazing. And this was your first blog, or did you do blogs before? Wow.
No, this was my first blog.
How did that come about?
You know, what's that old phrase? You make your own luck. So certainly I had some luck on my side. I had interviewed a founder who was playing in this market, and one of their advisors and investors saw it and said, I see some real value here, and I think this could be more than just a blog. And they were actually one of the founders of Napster from way back in the day. And they literally found my phone number from the email from when I had conversated with their founder, and got in touch with me and said, hey, I saw your blog. You seem really knowledgeable. You know, would you want to build something bigger than this? What if I kind of helped you and seeded your company and all that kind of stuff? So, you know, created a little bit of my own luck there, and obviously it's become much more since then.
You gave it away, right? Or did that become your company today?
It became the foundational element of building this company today.
I see. Wow, that's incredible. So let's talk about that. So I guess it seems like that was kind of a very smooth transition into KingsCrowd, your current company today, and kind of how it all started. You didn't have to go through the, oh, I have an idea, I need to make MVP, I'm gonna like research some VCs and then kind of do like a little tour around the country pitching. It seemed like it was a pretty smooth transition, almost sounded like really, really easy, but in retrospect, it was probably really stressful when it happened.
I think if there's one thing you need to learn as a founder is you have to get really comfortable with change and giving things up that you've worked on really hard to move on to the next thing and to keep building. And so I realized pretty quickly after my blog had been acquired and I was going to start building this company that, a lot of what the blog was doing, that wasn't going to be how the future of the company looked, because it was a blog. That's all it was. And having to kind of come to terms with that and recognizing a lot of it I was going to have to ultimately do away with and completely change how I was doing things, and getting comfortable with the fact that it was no longer going to be just kind of this fun thing that I was doing on the side. This was going to be my life. And I felt it was so important and I felt compelled that I had to do it. But at the same time, it was really scary, to just take a leap of faith and say, okay, let's go.
So you have investing background, you had exposure to private markets, and then you had your blog, and then you had a fortuitous event with an investor that obviously saw what you were doing, and they could see like what it could become. Now, whose idea was it to become the company it is today? Was it investors? Was it yours? Were you just kind of thinking back at your career, like, oh, private markets, that's like super cool. Oh, I love investing, and kind of find a way to combine it. Like, how did the roadmap start to form?
Funny enough, when I started the blog, I also started writing out what I thought a future business around it could be. Because again, my whole thing with the blog was, how do I start talking about the entire industry? Everyone knew of certain marketplaces like WeFunder, Republic, or Lending Club, or Ground Floor. No one knew the entire thing. And I thought, someone's got to bring this universe together. And so the very simple idea of our business was always to kind of aggregate this new disaggregated universe of new alternative investment platforms, bring it into one place, and start providing the search and diligence tools people are used to utilizing in the public markets. It's such a simple concept, and it makes so much sense that it doesn't take a lot of intelligence, lucky for me. So I kind of knew early on, this is exactly what I want to build. And I looked back at some of my early plans, and it's funny, really, the core of what we do today has not changed in almost any way. Obviously, the scale and a lot of the things around it have, but the core of what we're trying to do, that's never changed.
That's amazing. And so when you started, did you have another co-founder, or was it just mainly you?
I didn't. It was all me. And one of the reasons why it was really one of the scariest times, because I thought as soon as I quit my job and I started doing this full time, and it was May 15th of 2018, I remember thinking there's only two ways out of this. Either I find a way to be very successful, or this thing crashes and burns, and it's all on me either way. And that was definitely kind of a surreal moment.
It's back against the wall, like things are getting real now.
Yep, exactly.
So for someone like yourself that has a really great, I would say, consulting, strategic business background, for you to be able to build a technological software-based product, I mean, how soon did you hire your first engineer, or how soon did you find your first technical co-founder to help you actually execute?
Yeah, I probably wish that I could have done it even sooner. But when I started the business, I recognized where my capabilities were. I knew that I had experience in the industry I was trying to get into because of my blog. And I knew that I had a strategic mind for thinking about how I needed to tell a story to investors in order to hopefully raise capital. But I had no technical capability. So it's actually kind of a unique story of how I ended up landing our first kind of CTO and the person who's really helped build the product into what it is today. There was another company out there that was collecting data on our market. They were the first company to collect data on our market. And we were the first ones to be writing analyst reports and research reports on our market. And we started chatting. And I kind of told him about my grander vision and where I was headed and what I wanted to accomplish. And I remember getting this kind of funny email from him, not fully understanding it. And then I showed it to someone in the co-working space I was in, and they said, I think he wants to be acquired. And I said, how am I supposed to do that? I have no money, no resources. I was like, okay, well, that sounds interesting. So anyway, one thing led to another. We opened the conversations, and I ended up acquiring his company. And that became the backbone or the infrastructure of our tech platform that we have today. And so we integrated that with our kind of analyst reports and our research site. And now we really had something. So it was kind of a unique thing. It took about 6 months for that to come together. Probably took almost another 6 months to actually integrate it and make it into one product. So it was about a year until I truly had kind of a tech tool. Whereas, I kind of started by saying we were a tech tool, but we really didn't have that in place for almost 12 months because of our limited resources and kind of having to cobble the thing together.
So at that time, did you raise an official like seed round? Is that what you were kind of working
You
off
know,
of?
you can imagine. So our industry, right, is about
Hmm.
bringing transparency and access to the private markets,
Hmm.
and venture capitalists are about not providing transparency or access to the private markets. So trying to raise capital from venture capitalists for what we were doing was a pipe dream. So we had to get creative, and ultimately we decided to lean into our very own market, which is, okay, if anyone can invest in us, why don't we open up our own community round and raise via the online private markets? So we raised $120,000 from about 83 individuals back in August of 2018. And that was the first kind of seed funding to get things going. But you can imagine, as a first time founder, I was like, okay, I have 120 grand. I bring in a developer and pay myself a little and work a little bit on marketing. Suddenly we got 5 or 6 months. How does that work? So there was a lot of figuring out that went on in those many months after raising that first round of funding.
How stressed were you at that time? I mean, this was shortly after you made the decision to work for yourself. Like, I would imagine a bigger part of you is still more excited that, hey, like I'm working for myself and I'm building this thing that I'm really passionate about. But on the other hand, you're like, wow, I mean, I raised some funds through community, but like now we have runway issues. Now we have roadmap to think about, like how it must have been going 200 miles an hour. So like, how are you feeling at that time?
When you step out of your job and you say, okay, I'm
Mm-hmm.
going to do this thing full time, there is this moment of like elation and excitement and
Mm-hmm.
freedom. It's like, I'm doing this thing for myself and what I want to do. As soon as you accept that first investor's dollar, it's no longer just for you. Now you have expectations from people, right? And you have their money and they've put resources behind you and they expect a return and for you to take action with that money. So when you accept those first dollars, it is scary because you're going, oh my gosh, now I owe things to people. Now,
Mm-hmm.
now I have to actually present progress. So yeah, it was really intimidating. And, ultimately $120,000, while it's nice, how much can you truly accomplish with $120,000, right? So you have to get creative. I mean, I had consultants, I had 12 interns at Boston College where I went to school in undergrad, helping me do the investment research for a period of time. And I'm trying to train all these people and pay them $100 a report. And I mean, you're just doing all of the kind of ad hoc things you need to do just to figure out where are we actually headed. Because at the beginning, you really don't know. You know the pieces, but you don't know how it all comes together just yet.
I love that. I loved how it's just a clear example that not every startup story starts with, hey, I have an idea. I'm going to walk up to the first VC I see. I get a $2 million check and then life's good. Right. And I think this is a classic story of just like you just making the most of whatever means that you had, being creative, hiring interns. I mean, this is the stuff that like really excites me. And I think people who are listening, who are thinking about possibly embarking on themselves or embarking on their own ventures, like this is some inspiration that they can take. Like it's not just one route to get to your destination. There's so many different things and there's so many different routes to get to the summit essentially. And so I really appreciate you kind of sharing with this. So that is super cool. I had no idea about this at the beginning of KingsCrowd. And so and it's funny how like you were trying to build something that was kind of almost like the antithesis or the opposite of what traditional VCs were investing into at that time. So did it come to a point where like you spent your $120,000 wisely, you're kind of utilizing different means and people to help you? At what point, or did you ever reach a point where then you came back to the VC saying, haha, look what I built. Now you know it's real. Like help us kind of accelerate this growth.
Yeah, it's funny you say that. It's very interesting. I've definitely learned a lot about investors in general over the past 4.5 years. So we had that $120,000. We acquire this other company. We actually start building out a technology platform. We integrate it. We get our first paying customers, never having spent a dime on marketing, right? I mean, we ended up with 50 or 100 paying customers, which was really impressive in that first 12 months with absolutely nothing and just kind of cobbling the product together. But I had been pitching KingsCrowd 3 to 5 times a day, every day. So I was doing interviews, or not interviews, but doing pitches all day, every day, to angels, to VCs, to bigger institutions. And then I was spending my evenings actually, doing work and trying to run the business. At that point, it was still basically myself. We had a CMO at the time and a bunch of these interns. And that was about it. So, I was trying to run the thing at night, pitch all day. But it became pretty clear to me that there was still a lot of skepticism about our market. And this is very, very early days. We're trailblazing a new industry that does compete with the traditional venture world. And so, no, it didn't get easier per se. And I realized pretty quickly from the conversations I was having, there was nothing I was going to be able to do to turn a VC's mind until we get really big. And until this industry gets to a place where they can't turn away from it and they have to realize, oh, okay, which by the way has happened about the last 6 months. So the first 4 years, no, it was a grind. And so I started saying, okay, you can't do it all with 120K. What do I need to truly take this thing to the next level and start to show some product market fit? And I kind of figured I need just about $1 million to get there, to hire a few analysts, a few tech people. Then I could probably get this business going a little bit more. So I set up my entire campaign. I worked on prepping it to be able to raise this money online again, and started getting to know all the industry players and, are there marketing agencies that could help me? What was I going to need to do to raise that $1 million? And, I grinded away for about 6 months and had little success. I maybe raised about 200 of the million and was raising this all online. And then I had a couple of things break my way that I've been working on for months and months and months. Right around Christmas of 2020, I ended up raising about $600,000 really quickly from, I think, 600 or 700 individuals. We got some positive press coverage and things started to take off. And then all those groups I had been talking to for a really long time, some family offices and whatnot, all of a sudden they all wanted in. And I ended up selling at that $1 million in a matter of weeks. But it had taken almost 9 months to get there. And then it finally all took off in the last several weeks. And then COVID happens. Just as I close on the $1 million, the world implodes and it's like, well, now what? What does this mean? I don't even know what this means, So there's been a challenge around every corner, but we've stayed with it and we just keep progressing the business forward.
Yeah, I mean, in the nutshell, this is just genuine founder putting in the work, whatever you have to do consistently, putting in those calls, putting in those pitches. And it might sound like when you share the story, you raise 600, $1 million afterwards. I mean, it sounds easy, but the people have to understand all the work that you put in that kind of compound and snowballed to that result. So, and this is exactly what we want to show on this episode or on this podcast, that in technology, founders in general, we have, I guess, the privilege or sometimes maybe even the burden of TV shows and movies glamorizing our industry. And because of that, a lot of people just want to be founders for the sake of being founders, not knowing how much work goes into actually getting an idea off the ground. And so you sharing your personal experience, I think is really, really appreciated and very cool. So fast forward to today, Chris, would you be able to share just one more time, like what does your company do for the layman terms, or put it in a simple way?
Yeah, very simply, about 6 years ago, there were some regulatory changes and technology advancements that basically allow anyone to become a venture capitalist and an alternative investor. And all I mean by alternative investor is you can now invest in fractional shares of big real estate projects, right? So take $100 million real estate, maybe a major building in a city, you could split that into 100 million parts and each person could buy $1, share of that building. So nearly every private market asset is now being fractionalized and securitized. And there are thousands of companies each year now raising capital from the general public where you yourself can own a piece of equity in an early stage startup that's on the up and up. And so what we do is we sit at the center of that universe. We track the billions of dollars and the thousands of deals occurring each year across these asset classes. And we provide a one-stop shop for search, due diligence, and management of your alternative investment portfolio. If you've ever used Morningstar or Bloomberg or any of those tools for public equities investing, we're doing the exact same thing, except we're applying it to this new world of alternative investment opportunities.
Can people also invest into these companies through KingsCrowd?
Yep. When you come to the KingsCrowd platform, you'll get all of your search and research needs. And then there's going to be a button that says invest in whatever, and that will take you to the marketplace where you actually enable the transaction. Our whole thing is that we don't enable transactions, and that allows us to be completely independent and unbiased in our analyses and our research on all of these companies so that you have a due diligence partner who's working alongside you rather than maybe having, other interests in making sure a company does well or what have you.
So if I understand you correctly, KingsCrowd aggregates a lot of the data, right, from a lot of the platforms out there. And then you add another layer of analysis and analytics to help you make the right decision for yourself and your portfolio into the future. Now, putting you aside, I'm familiar with some of the platforms out there where you can invest. I know there's like Republic, Seed Invest, AngelList. How much are they making an effort in things like the analytics of the world or analysis? Like how would you consider them to be substantial competitors in that space? Or is the value that you're bringing completely novel that, investors are like, wow, it just makes sense. It's a game changer and I should just go to KingsCrowd?
Yep. So the value we bring is completely novel to your point. So the Republic We funders, no, they don't do anything around that. And not because they're not trying to do a good job, but because it's literally their legal requirement to create an open marketplace where investors can decide to invest in private companies. The only thing the platforms are there to do is really to make sure those companies are being compliant with their paperwork and their legal matters. Other than that, they can't be a market maker. They can't help you decide to invest in one company or the other. So they absolutely love us and love to collaborate with us. And by collaborate, all I mean is open lines of communication with us. If we want to talk to a founder for diligence purposes, if we want to, host a webinar with them, whatever it may be, they're happy to work with us and even provide APIs to us because they want us to exist. They need us to be successful in order to help grow this industry. You need that third-party diligence so that people have a trusted source to go to and say, okay, this is how I become an informed investor and make good decisions when I go to these various marketplaces.
Does KingsCrowd also invest?
So one of the biggest asks we had over the first 4 years of our company that we were not set up to do was to provide one-click diversification. They say, I completely trust your ratings. We have quantified and rated every company for the past 4.5 years. So we have about 5,000 companies in our database that we have quantitatively rated utilizing our own quantitative rating algorithm. And we've started to see some pretty interesting performance metrics from those quant ratings. And so people asked us, could you provide a one-click diversified portfolio of your highly rated companies? And so we've created a semi-programmatic fund. We haven't begun launching or investing in companies just yet, but we've raised over $1.5 million for our first fund product over the first few months. And it is something that we're looking to deploy very soon.
It kind of makes sense, right? If people are looking up to you to provide this verified, trusted source of research, I'm sure another secondary following natural train of thought is, well, wherever they put money, I want to put money with them too. So it's very, very cool that you guys are doing this. And then is this also open to the average person as well? Or
so unfortunately, the fund is not, only because of the rules that exist today. It makes it extremely challenging to offer a venture fund product to the general public. However, they can invest in KingsCrowd. They can invest in basically every deal that we rate on our platform because all of these companies are doing these public listings of their private companies.
Gotcha. How big is KingsCrowd right now? How many employees do you have?
So we're 25 full-time.
Amazing.
And we've raised about $7 million to date from over 4,000 individuals. And that's everything from, about $1 million from institutional investors to $100 from individuals.
Wow. And then do you have a physical office space?
So we're a fully distributed team. We grew from 3 to 23 during the pandemic. So we have regional hubs. We're from Boston, Raleigh-Durham, DC, Baltimore, the Bay Area, and the San Diego area are key hubs.
Can you elaborate a little bit more about what does hub mean for you and how does that work?
Yeah, so I mean, essentially all a hub means is that we have multiple people in those areas and we'll either have a co-working space or WeWork access or something like that, where you have the flexibility to go into an office and see other people if you want, but there's no requirement to do so. We don't have, required days in the office or anything like that. And we also do have people outside of those key areas like Texas and Washington State. And those folks, they don't go into an office and they work wholly from home.
Was the whole idea of having a flexible workforce something that you thought of from the beginning, or was it merely the result of the 2020 and whatever happened afterwards?
It certainly was a result of 2020. That played a major role. But I think something early on happened, which is I realized not all of the people that I wanted to work with lived in the city I was in. And I quickly became relatively comfortable with this idea of working apart, and if there's someone extremely talented and smart up in Oregon that I want to work with, why should I not work with that individual? As long as they're capable and competent and get the job done, I don't care where they live. And so, for us, we get to collect the very best talent across the entire country and work with those folks regardless of where they live. And I think it's really, really cool.
I would love to hear, as someone who obviously is day-to-day within the technical or technology recruiting sector, like how was your experience hiring? It seems like a bulk of your hires took place post 2020, which is a super competitive, volatile market, especially when it comes to competing for talent. So how was it with you guys in terms of getting the word out, or how did you feel like you were just doing in general in terms of getting responses from folks? And I mean, you obviously did a great job in being able to hire 20 plus people in that time. And so that's hats off to you and the team, and very, very impressive. But we'd love to kind of hear your experience.
I think the most important thing you can do as a founder is to just hire people more exceptional than you. And then your job is relatively easy, right? It's still hard, but it's much easier. And so for me, the people thing is the most important thing that I could be a part of and make sure is a success. Fortunately for us, a lot of our hires and our best hires have all come through referral of other people on our team. And so it's
Mm.
really been kind of this natural evolution where every year, we're adding between like 4 and 10 new people onto the team. And so by not needing massive numbers, we've been able to kind of curate the best folks from within our own network. And that's really led to a lot of just exceptional hires. And because we've hired a little bit all over the country, we have people tied into, Tulane in New Orleans. We have people tied into Wellesley in Boston. We have people tied into, the schools in the Bay Area. And so we've gotten this nice diversification of places that we're pulling from. And so we're able to get all of these kind of different talent sets. And honestly, it's happened really naturally. And I think
Mhm.
that's what's been so key to us having such a powerful team that works so well together.
Gotcha. And so moving forward, is it safe to say that you're going to continue this flexible hybrid approach when it comes to scaling out your
Absolutely.
team? It seems like
Yeah, I
it's going
think
very well.
we fully leaned into being a distributed team. Ultimately, I don't care what anyone says. If your team works extremely well distributed and was able to build a really successful company while in COVID, there's certainly no reason why they can't continue to do that. One of the biggest things we hear from people is that they love having the flexibility and ability to work from wherever they are. And you know what? Some of the most talented people I've ever met really don't want to be in the office. And some of the least talented people I've met want to be in an office every day, and vice versa too. But ultimately, if you find the right people, the talented right people that you need, they will thrive wherever you put them, as long as they know upfront, expectation wise, what to expect. And so we've had great success with it, and I plan on leaning into that in the coming years.
Yeah, it's great. It's great that you didn't really fight it. You embraced it and you totally, as you put it, very well, you just leaned into it. And it just goes against a lot of founders even today who are struggling with scaling and hiring in general, just because like they're extremely stubborn in their viewpoint and how things need to be. Like the market's changing, the economy is changing. At some point, you have to adapt and you have to do what's best for your team and your company. And it sounds like you're doing a wonderful job. So recruiting sounds like it's going really well, and I totally agree. Referrals is the best way to find fantastic people, and so I'm really happy that's a great channel for you guys to utilize. So for your company, what's the demand like in terms of, or the demand or volume or activity in terms of people investing into the private markets starting at 2020 to present day? Because we're talking right now in 2022 going to Q4 where there's a lot of uncertainty out there, and a lot of that can have a trickle down effect with just overall sentiment when it comes to investing. And so I would love to kind of hear your thoughts, perspective on that.
We've actually had dramatic growth of this market, and obviously COVID was really terrible for so many reasons. But, I think when you have these extreme events, they tend to impact change, right? Or change in behavior. And so what we saw going into COVID was we had this really nice growth of our market, but there was always that pushback from traditional angel groups, right? Oh, I need to meet the founder in person. I need to write the actual check, the physical check. And I'm not even kidding. These were some of the things that I was hearing from people. I'm not going to invest in you because you want me to do it online and I only write checks. I kid you not, that happened many times. And all of a sudden 2020 happens and we have COVID and people are stuck at home. And literally, it was kind of unbelievable to watch. We had this down month when COVID started, and then it's just like 3 or 4x almost overnight the amount of volume we were seeing in terms of dollars invested into deals online. And then we saw the amount of volume of deal flow grow dramatically. Why? Because founders are smart. The VC said, we're shutting off for now. And they said, I still need capital. Okay, here's a new capital market. I'm going to go over there. And so the deal flow numbers grew dramatically. And so through COVID, our industry like doubled and tripled. I mean, it was unbelievable growth that we saw. Now, kind of going into this recession, we've certainly seen a little bit of a slowdown, but basically the slowdown is that we're not seeing the extreme growth we saw. We're seeing kind of a flattening curve. And I think the reason why we're going to continue to see that in the coming months is because the market penetration of our industry is still so young and so low that we have enough new entrants coming in that even as folks are falling out because of worries about a recession or are living through this recession at the moment, there's enough new folks still coming in who are doing okay right now that are deciding to invest for the first time into these deals. So we really haven't seen a dollar drop off. And in fact, we've begun to see, again, a new bump in the amount of deal flow coming into this market. And to just give you a really quick sense, when I started this company about 4.5 years ago, if we saw 3 to 4 new companies a week trying to raise capital on platforms like Republic and WeFunder, that was a lot. Now we're seeing upwards of 60 to 70 new companies a week. I mean, it's dramatic.
Oh my goodness. Wow. I had no idea you saw companies coming in at that level. I mean, personally, that's just very surprising. But again, I appreciate the added insight. I mean, I think it's very easy to be consumed by the fear and uncertainty, but it's also helpful to kind of take a step back and understand that some of the biggest companies that we know today, especially in tech space, have been created during market conditions, right? And whether or not things get really, really quote unquote bad or things continue where they are, there will always be companies out there getting funded and created, right? And so it's not all doom and gloom. And I want to thank you for validating that.
Absolutely. I think one of the worst things that you can do is to act too knee jerk in markets like this. You have to take a long-term view, right? Didn't you get into this business as a startup founder to build for 8 to 10 years? If not, maybe you should be having a self-reflection regardless of the situation. But I'm building for the long term. Yeah, we might have to slow our burn, we might have to slow hiring, but to just go from extreme growth to extreme slashing of costs, that's not going to do anything good for your business long term. You have to think about it with a sustainable growth lens going forward. And for me, throughout this entire building of this company, we have taken a low and slow approach of adding pieces when we can, holding back on hiring certain pieces when we couldn't, and just being as thoughtful and methodical as we can be to make sure that we see the long-term vision play out.
For sure, for sure. And so another thing that I'm kind of curious about is if someone was listening to this and they want to get their feet wet and they want to slowly start investing, maybe in, for example, in the private markets that we're talking about right now, and they want to be able to utilize KingsCrowd as a very important tool or resource as part of their investment, just overall strategy. So to sign up, does it cost anything? Is it completely free? Like, how does that work?
Yeah. So we do have a free option. When you go to our site, you can put in your email and a password, and you basically create a free account. You'll get tons of educational content. And you'll also have the ability to start kind of poking around and looking at the deals that are out there. So that's a really good first step. And what I always say to people is set your thesis, figure out what is it that I'm interested in, what would actually excite me to invest in, and then poke around and find a few companies and a few platforms that kind of fit that criteria and make your first few bets, right? Put $100 in, put $50 in, don't go crazy, but just get your feet wet. And as you get more comfortable and more excited about the space and you understand it better, then certainly you could sign up. We have a $14.99 a month product per month. And then we have a $49.95 a month product as well for kind of the expert level. But you could start utilizing more of our resources and tools and due diligence tools as well. But absolutely, you got to take action. If you're on the sidelines, you're certainly not going to make anything. Take a few bets, take some risks, and start learning.
In terms of the companies on your platform, is it simply just aggregating from the existing platforms out there, or are you utilizing your own relationships and networks and channels to bring on a lot of other companies that, for example, might not be on these platforms? I think what a lot of people think within technology, or especially in the investment space, is that some people believe that some of the companies that are on these other platforms are on there because they weren't able to raise, for example, the traditional VC route. And maybe like the companies that go traditional VC route are not on these platforms. So like, are you constantly expanding your reach or trying to find ways to just bring on as many companies as possible on your platform? Or is it simply just kind of focusing on like what you're working with right now based on these other kind of secondary platforms that you're kind of aggregating from?
So we look at our universe being the online private market. So we're not trying to source anything that's offline. We are focused wholly and solely on the online private markets because there are thousands and thousands of deals available for investment. But that thesis that you have that, oh, the companies are raising these platforms because they can't raise from VCs, is just wholly and completely wrong. And that's why we don't care about even looking at the offline markets, because there's more than enough opportunity in this space. Just to give you a few examples to help set the tone, Alto IRA, for instance, is a company. They raised, I think, $1 million or $2 million on Republic at a $30 million valuation. Months later, raised $17 million at a $90 million valuation from many institutional investors. You may have remembered Mercury, right? They became a unicorn last year, $1.65 billion valuation. Immediately went and listed from Andreessen Horowitz, Coatue, all the big names. They then went and raised $5 million on WeFunder immediately after. There was another company, Maven, that had raised only a couple $100,000 on one of the platforms. Months later, got a $100 million valuation from Andreessen Horowitz. All of this is to say is there is more than enough exceptional deal flow out there on these marketplaces. And trust me, especially if you utilize our tools where we identify companies from a 1 to 5 scale, if you're looking at the 4s and 5s, you're going to find a lot of really interesting companies. And also, not surprisingly, a lot of companies that have been venture backed already.
What sectors are you seeing are particularly hot with activity right now coming into like the end of summer, into Q4, or maybe just in 2022 in general?
Clean technology has been huge, and supply chain and logistics has been huge. And I don't think those are surprising, right? They're in the news every day. Everyone's talking about them. I do think the recent bill passed by the Senate is definitely a really good sign for kind of clean tech EV companies. And we're just seeing a boom of deal flow and dollars go into those types of organizations.
That's really cool. So I guess moving forward, like what's the future? I know we talked a little bit about you guys possibly thinking about directly investing yourself and perhaps others can follow, whether through some sort of syndicate or something similar to that, maybe. But like, are there any other exciting verticals that you're thinking about or just in the next kind of 2, 3, 5 years of KingsCrowd?
Well, our vision is that over the next decade, most private market transactions move online in one way or another, right? Whether or not it's an open marketplace or whatever it may be, most of it is going to be done online in one way or another. And so, kind of our grand vision is to own the world's private market data. And what we mean by that is any private asset class you could think of, be it startups, late stage companies, debt deals, collectibles, real estate, NFTs, digital securities, anything that trades online in one form or another that is not a traditional public equity, we want to own every one of those assets and every data point of those assets globally. And so over the next couple of years, we're going to be expanding into new asset classes, including fractional collectible platforms, fractional real estate platforms. We're also going to be expanding internationally to things like the UK, Latin America, and eventually APAC. So we have global ambitions across all asset classes.
People who are listening who might be interested to one day apply and give it their best shot to work with you, like what if you were to maybe sum up one big, I guess, reason or X factor that makes working at KingsCrowd very, very special, what would it be?
You know, it's been 4.5 years that I've been running the company. And amazingly, really, no one has left of their own volition in 4.5 years, right? That retention level is kind of wild. And it's even surprised me. And I can't tell you exactly the reason, but what I will tell you is that the people here are exceptionally talented and they're very mission oriented. The other day, I had an opportunity to listen in while a few of our folks were talking to one of our new hires. And the way that they talk about it, it's almost scary. Their level of passion around our mission and what we're doing, and the fact that it makes so much sense, right? The private markets are being opened up for the first time ever, and we're helping to enable that and empower individuals to do this confidently. They believe in it so strongly in a way that it's like, I have made that a thing that now matters to them and that they're dedicating every day of their life to that. It's really incredible. It's probably one of the most incredible things you'll experience as a founder is getting other people so bought in on your vision. That's a dangerous power too. You need to be careful with that. But there's something really amazing about working with a bunch of just motivated people by a really powerful mission.
Wow, I love that. And then I guess once you start thinking about expanding your team, like, do you know, maybe it's too early to say, but do you know what some of your maybe next couple of hires would be? So people are listening, or maybe they might know someone who might be interested. They can maybe give you a good shout.
Yeah, I'll just say, I think over the next 6 to 9 months, there's really 3 key areas that we've always hired across and will continue to do so. That's really on the marketing and growth side of things. It's on the investment research side of things. So people are interested in becoming venture capitalists or have been venture capitalists. We have tons of investment analysts and we'd love for you to join the team. And then programmers as well to continue to build out our suite of product and tools that we offer our customers.
That's exciting stuff. And I guess for anyone that's listening, if they wanted to take a stab at becoming a founder themselves, or maybe navigate the career in such a way that you did, I mean, honestly, Chris, you just kind of made it look easy. And I think in the tech industry, if you were to maybe just paint like one of the best or most recommended track that you can follow in your career, a lot of people would say start, develop your skill set in consulting or IB banking, and then take a stab at joining a startup. And then if that's something that really excites you and confirms that you want to continue, and then leverage all that to kind of start working for yourself. And that's exactly what you've done. Is there any advice that you'd like to share with those who are listening, who might be wanting or inspired to do or follow in your footsteps?
I think if I was going to provide a piece of advice, it would be more to provide like a piece of truth, which is just, if you do this, first off, you should do it. You should go after it. If everything in your body is telling you, I need to do this thing, I need to go found this company because you truly believe in something, you should do that. But once you get there, I want you to know it does come with the highest highs and it does come with the lowest lows. And, they always say comparison is the thief of all joy. You're going to see all these people raising money, having success. You don't know all the things going on behind the scenes, all the challenges that they're facing. I mean, the worst days of my life have occurred running this company. There have been so many times where I thought we might die on the vine. I mean, this is a really, really, really hard thing. And you have to know that it's going to be a gut check and it's going to kick your butt and it's going to be awful at times. And I just say that because if you get into this with all of this excitement and joy, and then you realize how hard it is, and you think no one else is going through this like me, and then you want to quit, But I'm going to tell you, don't quit, because all of those things you're going through, every founder is going through. Founders are really good at being charismatic and really good at holding it together, because that's what you have to do to a degree. But you also need to be real with yourself. You need to have a support system around you, and you need to recognize that you're going to have some really, really bad days, and that is completely okay and completely normal.
So if people wanted to check out KingsCrowd, or maybe people wanted to reach out to you, where can they find you?
Yeah, I'm always happy to chat. So you could obviously go to kingscrowd.com and sign up and check out our services. And then if you ever want to chat with me, Chris at kingscrowd.com. You can find me, Chris Lustrino, on LinkedIn, at Simple Innovative on Twitter. Always happy to connect and always happy to chat.
Well, Chris, I want to thank you for taking time and chatting. And I personally have learned a lot of really great, insightful nuggets, and personally, in a way, got inspired by your story. And I also appreciate how you're just open-minded to just be vulnerable and keep it raw and keep it real for the audience. And I think that's something that we in the tech industry, or just in more industries, need to do more, and not to give people the wrong picture that if you want to start your own company, that's going to be smooth sailing and roses and sunshine every single day. It takes a lot of work and grit, perseverance, and belief in yourself. And it's, again, really, really great to see what you've done with KingsCrowd from back in the day, starting from even your blog to what it essentially became now. And very, very hats off to you and your team, and very excited to see what you guys will do in the next 3 to 5 years. And we'll do whatever we can to root for you on the sidelines.
Well, thanks for the platform, and thank you for the opportunity and time.
You got it. Likewise. And thank you again, Chris. And we'll certainly keep in touch.
Outstanding.
Thank you.